So welcome again to the Texas REIAs, largest network of real estate investor associations in Texas. 150,000 members, participants, and attendees going back to 2003. And we provide training. We have 1,000 private money lenders, 25,000 buyers, lots of resources, including market data. And I'm going to share a little market data with you guys right now. So what's going on in the market? This is the Texas Roundup. Let me freeze this slide. The average price in Texas is $407,000, up 0.7% year over year. It's basically flat. Median price $321, down 1.5%, basically flat year over year. And Shanoa, did you want to help out with the market update? Yeah, okay. Well, this update was actually made by Shanoa. So I'm going to let her, the source of it all, share it with you. You can have the clip on if you want. You're going to use that?
Yeah.
All right. Well, I'm going to turn it over to you, my dear.
All right, guys. So thank you guys again for joining us, and excited to see many of you guys at our upcoming 3-day workshop, and share with you a little bit more about how you can leverage where we are in the market today to your advantage as a real estate investor. So as Phil was saying, the market is basically flat when it comes to the average sales price. Last month, the number of closed sales that we had year over year was down 3%. We do have a pretty steady number of pending sales, so you'll see that over and over again. And then our months of inventory right now, 4.7 months of inventory versus 4.4 last year. So this is kind of, you can think of this as like the worst case scenario in terms of how long you would hold a property until it's actually sold. And then we've got days on market increase a little bit, about a week over where it was the same time last year. On the bottom, what I have is, for those of you guys who like to get kind of techie and geek out a little bit on the numbers, I've got the historical sales data going back to 2020. So you can see how 2021 compared to 2020, and even how 2025 compared to 2024 in terms of the roll up. So last couple of years have basically been flat to up a little to down a little. So up or down 1% to me is basically flat. And the sales price has been flat the last couple of years too, just because we had such huge gains in 2020, 21, and the first half of 2022. Anybody in here investing in Dallas as well? For those of you guys who are interested in Dallas, again, a little bit of the same story. So the average and median price flat to down 1%. The number of closed sales last month down 6%. Pending sales down 10%, and we're increasing the number of active listings there. We are seeing an increase in the number of leased properties. So it's one of those situations, if you can't beat them, you join them. And by join them, I mean just hold on to the property. So sometimes homeowners are accidental landlords, and sometimes even investors are accidental landlords. But I will tell you, some of the landlords that have made the most amount of money are actually the ones who started as a flipper and then ended up holding it, and then instead of making a $20,000 or $30,000 profit, held it for maybe 3, 4, 5 years and made a $100,000 profit as the values went up. In the Austin market, same story. Average price up 0.5%, median price down 2%. Days on market, a small increase versus where it was last year. Closed sales last month down 6.5%. We also in Austin saw a decrease in the number of leased listings as well. And I've got the historical data on at the bottom of the chart too. For San Antonio, which is what many of you guys came out for, and this is where I see all the cameras coming out to be able to grab this. I'll keep this up on the screen long enough for you guys to take a picture of it. But last month in San Antonio, the average price was up 3%. The median price was down 1%. We're spending a few more days on market than what we were the same time last year. Closed sales last month were down 10%. Pending sales, and this is the closest leading indicator that we have for what closed sales will be when we look at the final numbers from last month, but down 22%. But we are seeing an increase in leases over here as well. And you can see the historical nature of the market here. So the last couple of years, just as interest rates have gone up, you've seen a lot of down in terms of the number of closed sales and a lot of down in terms of the average price, but it's only down 1 to 2%. So not too bad. So what that means for us as real estate investors is we still got to buy it right. And we can't listen to the seller asking and needing for more, because if we get in a situation where we're overpaying on the buy, really there's no recovering for that. So as a real estate investor, we make our money on the buy. If we do everything right, meaning we manage the project well, we manage it at a good pace, so we're not holding it for too long. And as long as there are no surprises, which is probably the hardest thing that we encounter as real estate investors, then we're going to do just fine. But remember, no deal is better than a bad deal. So even if it's your first deal, there's something about a new investor's first deal where they usually overpay. And I will tell you this, the last deal that I ever want to see any of you overpay on is the first deal. But for some reason, that's the first deal that everyone overpays on. I don't know why. I think it's a little bit of the cognitive bias of, well, what could go wrong? I've watched HGTV. Like, I think I got this, right? Guys, it's one of those things that's simple, but it's not easy. And that's why we spend 3 days talking about the ways to be able to make sure that you avoid any of those rookie mistakes. For the Houston market, last month, the average sales price up 3%, median down 1%. Houses in Houston are selling very fast. Houston was one of the best markets last month. The sales were down, but only down about 1%. Pending sales in Houston up 8.5%. Active listings saw an increase of 16%. And we're still seeing an increase in the number of properties that were leased in the Houston market as well. So Houston and Dallas are probably the strongest markets here right now in Texas. And in terms of market drivers, we identify a couple different market drivers. For my picture takers in the room, this is a build slide, so wait to hold off to take a picture. I'll let you guys know. But some of the things that we look at, the overall economy. So what is consumer confidence at? What is the unemployment rate at? What's the job growth? How's the stock market doing? We also look at housing affordability. So for the first time this past week, we saw interest rates on mortgages dip below 6%. It went to 5.98%. But it only stayed there for about 2.5 hours, right? So literally a day later, it was back up just slightly above 6%. But we do have some things that are coming in that will probably cause that to be reduced over the next 3 months, because Fed Chairman Powell is scheduled to be replaced by someone else who Trump sees as maybe a little more dovish when it comes to setting interest rates. So we may see those interest rates come back down, which will make housing a little bit more affordable. We also look at the housing supply. So not only do we look at demand, but we look at supply. So on the supply side, we are seeing active listings increasing and months of inventory increasing, but it's still kind of in the yellow. It's not in the red. It's not in the danger zone. Housing demand, so closed sales, again, we're basically seeing it, and we've seen it for the last 3 years as we've seen the increase in interest rates have its effect. We're seeing demand basically be flat year over year. And then we also look here in the big thing that we look at in terms of what creates demand is the amount of in-migration. So do we have more people coming in than we have leaving? And Texas still has very strong in-migration. And the last thing that we look at, and gosh, after this weekend, I should probably change war to red, because we did send some missiles over to Iran, and today we bombed one of their ships. So this is real stuff, right? And it does have an impact on overall housing market. So there are some wild cards here. The interest rate decreases and when that's going to happen, when those are going to happen. We've actually saw some really beneficial tax law changes. How many of you guys in here have rental property? Some of you guys were earlier saying you have rental property. So the benefit to us as real estate investors is that we get to take something called depreciation. Depreciation is a non-cash expense that we get to use to reduce our adjusted gross income and reduce our tax burden. So that is something that we saw got to stay. Obviously, war, we've got a couple of things going on. Tariffs. So the Supreme Supreme Court last week basically said all of the 50%, 75%, 100% tariffs, that were being called out different every day, that those were illegal. So that might mean some reduction in overall costs from the stuff that we're importing. We'll still yet to see. And then immigration and some of the issues that may be causing. I would say of all the 4 major markets in Texas, San Antonio is probably being affected the most by immigration, and that may be why some of the total sales are down a little bit lower in San Antonio versus some of the other markets. And in terms of our forecast for 2026, I say we've been kind of at the bottom of that market cycle, right? The bottom of the market cycle. And we've been kind of hovering around here for probably at least the last year. I think we'll be able to hop out of the bottom and start to get on the upside again as soon as we see interest rates drop. Even being around 6% hasn't driven a whole lot of housing purchases, but I think it's really going to take us being in the 5.5% range or lower to really start to speed up some of those housing purchases. And again, we'll see sales flatten, so from being down a little bit to basically flatten and then start to rebound as those interest rates start to decrease. If you look at the numbers for 2025, sales were up, but again, up 1% is basically flat year over year. And 2026, I believe, will be up in terms of sales in the 2 to 3% range. Again, because we forecast probably by around mid-year, we'll probably see some of those interest rate deductions. And that will also have an impact on our overall prices. Houses become more affordable. All of a sudden, everybody wants to get back in again. And as people want to get back in again, as supply stays basically the same because we haven't been building a whole lot of houses, as we see demand start to go up, we'll see that price start to go up as well. So guys, any questions about the market update? This is our last presentation for the night before we wrap up. Any questions that you guys might have about the market update or the upcoming workshop or really anything real estate?